Shares of Nvidia jumped more than 6% in Thursday morning trading, a day after the AI bellwether reported a blockbuster 69% surge in quarterly sales. The higher-than-expected sales growth was driven by customers stockpiling AI chips ahead of U.S. export restrictions on China. The company, however, warned that the new curbs, which would stop Nvidia from selling its H20 chip made for the Chinese market, are expected to cut $8 billion from its current quarter sales. But the hit to chip sales was not as bad as feared, and Nvidia also talked up demand for its new Blackwell chips from customers including Microsoft. That was welcome news to investors, says Morningstar equity strategist Brian Colello.
Investors can breathe a sigh of relief that the China revenue impact is now known a bit better, and it's not as severe. Meanwhile, the Blackwell products and the transition to the newer Blackwell architecture is in full swing, better than anticipated, and there's still plenty of demand in developed markets and elsewhere. So Nvidia is still in a tremendously strong position in AI in the markets it's allowed to serve. And with China, we'll see. Again, we're not necessarily betting on a China comeback, but that's pure upside if there is.
CEO Jensen Huang, on a conference call with analysts, said Nvidia was at risk of being cut off from China's massive AI developer base and argued that China's chip industry was sophisticated and closing in on the United States. But he praised U.S. President Donald Trump's recent move to rescind a so-called AI diffusion rule that would have regulated the flow of U.S. AI chips around the world. Despite the Chinese export restrictions, Nvidia forecasts sales of $45 billion, plus or minus 2%, in the second quarter, only slightly below analyst average estimate.